I guess we're going to not have Evander Kane on LTIR.
Well, we still could. I mean, still could work out for us, right?
Could do something. Accrue him. Apparently, you can accrue the unused cap space until when he does come back, and then you are cap compliant.
Yeah. Today I learned.
And then you pick up a defender, another a right side defender at trade deadline or something, right?
Totally, yeah. This wanting to hold on to those two players, it's endowment effect.
I was thinking about that during Sports Talk Radio as well when I'm listening to these people and the responses, and it's like you can't get a fourth round pick for this guy or a third round pick for this guy. I'm like, well, that's what it's getting now. Forget what you got him at, right?
Mm-hmm.
Yeah.
The goal is the Oilers have to get back to the finals and they have to win. And step one to getting there is they need to be competitive coming up to the trade deadline, and then they need to have a little bit of cap space to be able to trade for maybe a right-handed defenseman, whatever we find we need. We're going to find out sometime during the season if we're really short in some area. But I mean, that's every good team. Every good team picks up some players at the trade deadline. And if we're in a situation where we're right up to the cap and we have no flexibility, we're not going to go to the finals. Plain and simple. We're not going to spend $4.5 million on an untested rookie defenseman just because St. Louis thinks he's worth that. So what is it, August 20th? You wanted to talk markets? What's going on?
Well, Canada's not a big country, in the global financial markets. 3% is usually the number that get thrown around. And there's not a whole lot of national champions that are well known internationally. But every now and then you punch above your weight, right? And just recently, this week, yesterday, I think, in fact, news came out that Couche-Tard, Alimentation Couche-Tard, Canadian company, better known as Max or Circle K, they're planning on doing a takeover offer for 7-Eleven, which is, a Japanese company. Scale-wise, much bigger in a lot of ways, but on a dollar value, market capitalization value, actually worth less than Canada. Don't have to get into than Couche-Tard. And we don't have to get into specifics why, but there's a discrepancy. And so Couche-Tard is thinking about doing an offer.
7 & I Holdings, right?
7 & I Holdings, yeah. And so, we've all gone to a convenience store. The last time actually I was at a 7-Eleven, it was probably on July 11th because that's Slurpee Day. And you can get a free Slurpee on Slurpee Day at 7-Eleven. So keep that a note of that for next year. But if you travel in Asia, it doesn't matter where you go, Bangkok, Seoul, Tokyo, anywhere in Asia, right? Like there's convenience stores everywhere. And so, why is this happening now, or why did that happen now, which made me kind of think about Japan as a whole, which making a connection to something we talked about in the last or in a recent episode about I won't call it a flash crash, but a big crash on the long weekend in August at the beginning of this month, and then just kind of go from there. So you're pulling up a chart here on the on the screen, and it's Couche-Tard's stock chart. It's a nice looking chart.
The owners of 7-Eleven, the Japanese owners.
Oh, that thing down at the very bottom there? Oh, yeah, that thing.
Crawling along the bottom there. So I wonder, they were saying, Couche-Tard is this little Canadian company, and 7-Eleven
so little.
Known around the world. How is this little Canadian company taking over 7-Eleven? Well, there you go. One's had a much more successful stock price. Why is that, though? Like, I'm looking at, one thing I was also looking at here, they're both in the same industry, same type of business. Couche-Tard's trading at 4 times book value. 70 is 1.4 times. Like, what explains that?
And that's after like a 20% bump in price from yesterday, from when like the bid was sort of announced, right? So it was even lower than that previously.
7 pays a higher dividend.
No, so why? I mean, again, not to get into the
higher revenue growth.
7-Eleven has like more than double the number of stores than Circle K, Couche-Tard, right? And they're much more well known. What the major things, and I think this is sort of part of there's been reforms that have been made in Japan, particularly over the last year or so. There's a lot of governance concerns that are kind of like, for lack of a better term, old school in the East Asian countries, and cross ownership and poor return to shareholders, whether in the form of dividends or buybacks. Essentially, there's many companies in Japan that are trading at less than book value, liquidation value, less than the cash that's in their own bank account, in the corporate bank account. And the reason why there's a discount to that relative to, say, North America, where oftentimes a good performing company like Couche-Tard is trading at 4 times book is that they've been able to compound, and there's a valuation attributed to that. So there's been reforms that have happened in Japan, a few more shareholder friendly sort of initiatives that are supposed to help distribute out that all that cash that they've been hoarding for years and years or decades or centuries, right? I think the oldest company in the world is actually Japanese, right? There's many of them, that have, in any case, old habits die hard, but they're starting to make some changes, and that's part of the reason why I think Japan is starting to get has been attractive, or has been a talking point in our circles over the last year or two. And but there's still obviously a valuation gap, which is why Couche-Tard has been able to use their highly valued paper. And it won't be just paper. Probably, if they are going to be successful at this, they're gonna have to raise tens of billions of dollars in cash and in debt and in equity to buy 7-Eleven. Right. So I kind of doubt it's actually going to happen, but it kind of goes to show the valuation discrepancy of a North American company, Canadian company, versus, say, something that's in overseas, and which kind of gets to, again, touching upon points on themes of diversification and investing around the world and things of that nature, right? So.
Yeah, different markets, very different markets, I think, in terms of investor appetite for any type of companies. On the one hand, you got this Japanese market that's been pessimistic for many years. People have been not as excited about stocks in Japan. As a result, the stock market there has kind of languished, and just in recent started to pick up again. And in Canada, meanwhile, I think Canada, we have this issue where we don't have a lot of different stocks to choose from. And I think we as investors become a little bit too enamored with certain companies, Couche-Tard being one of them. It's one of those market darlings that every investor has to have, every fund has to have it. I think similarly in Canada, that's why we had companies like Valiant back in the day, Research in Motion. It's when that one company, there aren't a whole bunch of technology companies or a whole bunch of health science companies in Canada like there are in the US. There's always just that one, and we all become enamored with it. We pump its stock price to ridiculous valuations, and then it comes crashing down. Shopify more recently too. Shopify is a fine company, but its stock price had no business being where it was at one point in 2021. But yeah, and I mean, Couche-Tard, they're at least the beneficiaries of this. They are taking over a company that should, by rights, be a bigger company, but looking at their market caps, Seven & I is worth about half as much as Couche-Tard.
You're looking at the big fish in a small pond in some senses, right? And then if you have, like, for example, an ETF or a fund, and it's the Canadian equity fund, like, by definition, the parameters are such that it's in Canada. Now, caveat that you might find out, a listener or a viewer might be shocked to see that there's a lot of Canadian equity mandates out there that are actually not 100% Canadian. They could be up to 49%, maybe in some cases, not Canadian, and they can still call themselves Canadian. And it's almost because the PMs have said, hey, there's just not enough companies, to your point, in Canada. I need to go outside of Canada in order to move, to invest this money. And there's others that are going to be much more stringent and say, no, it's 100% Canadian, right? It can be only Canadian-based companies.
Yeah.
Right?
It's important as an investor, you know what you're invested in there too, because You're right. VCN, you bring that up, that's an all-cap Canadian ETF. You know what you're buying. It's Canada. Blah, 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 Canadian growth. I'm not going to throw any fund companies under the bus, but there are a few that are very notorious for doing this. You can call a fund Canadian equity if, like you said, it has 51% Canadian equity. Now, when you're comparing fund versus fund, one Canadian equity fund looks fantastic over the last 10 years, the other not so much. Well, the former is 49%
NVIDIA or Microsoft in it.
It's got Microsoft and Google and NVIDIA in it.
Yeah.
And the other one is 100% Canadian equities. And if you're looking at building a portfolio out of that, and you're assuming you've got, maybe you're aiming for 20% Canadian or 30% Canadian or whatever, and you're using that first fund, which itself is only
Mhm.
half Canadian, well, you don't actually have as much Canadian as you thought you did. Maybe that's what you want. Maybe it's not.
Yeah. So lot of little themes on there, but it goes to the point like, Japan has sort of been Asia. I mean, we talked about Hallyu and Korean Wave and all that, and Japan has always had a thing ever since like Shogun or now sushi is ubiquitous. Remember a time, and even in our lifetimes, they're like sushi, raw fish, like whoa, right? But
Yeah,
now,
yeah. When pretty much up
yeah,
until we were teenagers, I was like, I'm thinking, well, there was a Simpsons episode, remember, where Homer went to discover sushi for the first time. He had the
yeah,
fugu fish and got sick
yeah,
off it, thought he was going to die. That was a time still when, North America was still considered a weird oddity that,
yeah.
maybe Japanese people or maybe some of the trendy folks in California ate that. But then I noticed as early as 2003, I was on a ski hill in Vermont, and there was a sushi place. I'm like, sushi here? Like, and now, like you said, it's ubiquitous. I can go down to
It's
the
it's in
mall
the
and get
it's in the
food
grocery
court
stores. It's
sushi.
yeah,
Get
absolutely.
sushi at 7-Eleven. I wouldn't recommend it though, but
Sushi at 7-Eleven in Japan, I would recommend.
maybe,
Right?
maybe.
Sushi and
Ever have a
7-Eleven,
sushi chef in the
on 16th
7-Eleven?
Avenue here in Calgary. Yeah, I don't know about that one. Right? Just go get the hot dog instead, right? But
I can trust the hot
um,
dog.
correct me if I'm wrong. Like, I mean, I have connections to Asia, right? And I'll go back, right? Um, you know what? In the last couple of years, like, WestJet has direct flights now to Tokyo. There's been advertisements everywhere. I've met a number of people who have said they are going to Japan for the first time,
Hmm.
or had gone to Japan for their first time in the last couple of years. Part of it's, currency valuations, and
Hmm.
I'll touch
Hmm.
upon that as well. But also, it's somewhat normalized now. It's exotic, but not exotic, right? Just Japanese stuff everywhere now, right? So, but yeah, correct me if I'm wrong, but you haven't been to Japan or East Asia or Asia
I've
itself,
never
have
been
you?
to Japan, but I really want to go someday. And you're talking about this topic now. Let's make this
Mm-hmm.
the episode about Japan. Obviously, at the beginning of this month, we saw some rumblings out of the Japanese markets with the whole carry trade issue coming about. We'll talk
Yeah,
about that in a second, I think.
yeah.
But Japan has already been getting cheap, like cheaper than it ever has been for us tourists from the rest of the world,
Mm-hmm.
and it is only becoming more so. Looking at exchange rates here, Canada Japanese yen exchange rates right now it's at 107.
Mm-hmm.
The end of last month it jumped up to 118. That's, you get 118 yen, or you did. Now you get about 107 yen per
Yeah.
Canadian dollar. For the longest term, that exchange rate, for the longest time, that exchange rate was about 100 to 1 US. So 1 US dollar was
Yes.
100 yen roughly for quite a
Yes.
while, give or take.
Yes. Yeah. Yeah.
Now
Yeah.
it now the yen has come down so much that you're getting 107 yen for a Canadian dollar.
It
And
stretches
things in
way more than
Japan
it used
have
to.
become
Yeah.
cheaper too. I mean, it's not like the 1980s where, it cost $500 for a round of golf or something. And I mean, back then that was a
Mm.
lot. Or the Emperor's Palace was worth more than all the real estate in California. That thing
Yeah.
that
Yeah. 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 Yeah.
keeps being
That's
trotted
right.
out. But it's a cheap place to vacation, and it's probably a nice place. It seems nice,
It's
clean,
amazing.
safe.
It like
Yeah.
just on that topic, on that comment, it's super modern, right? But
Yeah.
also in some senses very traditional. And that juxtaposition, that contrast where you can just literally walk like 2 city blocks and you go from like the busiest intersection in the world, right? In terms of pedestrians,
Hmm.
right? And then you go a few blocks away and then it's a small little road that has like little tiny restaurants that have like 6 people sitting inside of it, sort of idea, right? And it's safer, it's cleaner, it has those sort of things that people think about Japan, and it's not as, again, sushi is normalized here. Tempura is normalized, right? You can go for it, and so like going over there, it's not as much of
Hmm.
20, 30, certainly 40, 50 years ago, right? And so yeah, it has become very attractive. But it's funny you talk about like that Canadian yen exchange rate. At one point, this year it was 118 and now it's 107, whatever. That's a 10% swing. Like currencies are not supposed to swing like that, but there's a reason why it's swung like that. Like the value of a currency versus to another one went 10%. Like that's crazy. And when you think about that shift, right? But it kind of goes to interest rates, and interest rate. People love talking about interest rates in Canada,
Hmm.
mortgages, GICs, savings rates, all have you. in Japan, the story for decades, years and decades, was that it was ZERP, zero interest rate policy, but on steroids. It's been decades, right? It's been under 1%. For many years, it was negative, like from like 2016, almost a decade ago, it went negative. They are paying, like his negative interest rates. And
I'm
then it
showing my
went
screen again here.
positive. It went from like negative 0.1%, the Bank of Japan rate, to positive 0.1% earlier this year in January or so, right? March, in springtime. So it went from negative 1.1, negative 0.1 to positive 0.1. That's a 0.2% difference, whereas the Bank of Canada already's cut 0.5% this year. Cut, right? And then what happened that kind of caused this whole carry trade unwinding was that in July this summer, it went from 0.1% to 0.25%. Like, we're still talking 0.25 of 1%. But that change from 0.1 to 0.25 made all the difference. And it crashed the market. Well, crash is not the right word, but it made a severe change. And that's why I want to talk about yen carry trade. But you're pulling up another chart, and tell me what we're seeing.
Yeah,
here.
I got some chart. I'm trying to find out what their rate is. I know during our last podcast, I looked it up and it was 0.25. It went from 0 to 0.25, and that's what the big hubbub was about at the beginning of the month. But this is looking at Bank of Japan basic discount rate, which is probably something a little different. But anyways, you look at this graph. It at least reflects what interest rates roughly have done in Japan, going from 0.3 to 0.5 in like just one fell swoop like that after all these years.
So yeah, pull up a graph for you see, but you'll see it's been decades since like 30 years, like where it's been under 1%, right? Which it kind of gets into, while you're pulling this up, what the carry trade is. And you know what? For most people, I want to say like 99% of the people out there, you are living your life quite nicely without ever having to know what the carry trade is, what the yen carry trade is, right? But here's me today trying to explain a little bit of what happened. So imagine you can go borrow money very, very cheaply, right? And this was kind of like the reality in North America not that long ago, right? And then what you would do with that money, you would go buy something else or invest in something else. Call it a house, call it a car, call it whatever, right? Investments in the financial markets, right? If you could borrow at zero or have your interest rates that you would have to pay interest to borrow that money to be very, very low, and then even to buy, and get an interest rate of say 4% somewhere else, I would do that every day. I would borrow up to the most maximum amount of money that someone would lend me. Then I'd go to someone else and I'd borrow more money from them. If I only had to pay 0.1%, and then take that money and then go somewhere else and get 4% risk-free. And that was the reality. This is what happened. Japan had a very, very low interest rate, or no interest rate. Let's just call it like nominally zero, right? So people would go to Japan, right? Not physically, but they'd say, hey, I'm going to borrow $1 million in Japan. It's going to cost me $1,000 a year or something to pay for interest for this $1 million. I'm going to take that $1 million. I'm going to convert it to a US dollar or even a Canadian dollar. And then I'm going to put into a GIC or a treasury bond or a treasury, right? And get 2, 3, 4, whatever percent it is. Who wouldn't do that? And that's what they did. And a lot of people did it. Maybe not you and I necessarily, but institutions did it. And that money that came over fueled a lot of the equities and things like property and the equity markets elsewhere, or even just the value of the treasuries. Yeah, because why wouldn't you, right? I mean,
for many years too, it depressed the Japanese yen, because what happens too in the money markets is when an interest rate is lower in one country versus the other, everything else being equal, that currency is less attractive. So there's money kind of pulling out of that. Like you said, the carry trade, I think, is the most extreme case of it. But just in general too, if you look at Canadian dollar versus US dollar, the Canadian dollar has been a bit weaker of late because we were first to cut rates.
All of a sudden, so the depreciation, everything like that, all of a sudden, the Bank of Japan increases rates nominally a little bit, but they said they moved it up. That was the difference, right? So now my interest is my interest cost has gone from almost zero to non-zero.
Mhm.
And at the margins, like, oh, I'm getting called. I need to pay back this debt. Maybe I took, instead of $1 million in my example, maybe I borrowed 10 million, right? And let's say I took that 10 million. It's like all of a sudden, like, oh, I probably can't borrow $10 million anymore. I'm going to borrow five. I got to sell $5 million of something else so I can pay back some of this debt that I borrowed, this yen that I borrowed, right? And so that I can reduce my interest rate costs. So just that little tweak of that little percentage change meant that all of a sudden people were getting called. They're getting margin called. Like think of that movie, right? Or you're
Mhm.
saying, okay, I got to reduce my my borrowing, right? My borrowing went up, on a percentage basis, like 300% or whatever case may be. So what that required people to do? They had to sell other stuff, and the other stuff that they sold, a lot of it was North American equities. And so that day on that August long weekend earlier that month, that was one of the major issues. Like over the weekend, they made that decision. People started unwinding their borrowing. I got to liquidate so I can pay off this line of credit that I have over in Japan. And then that caused a huge dive. And, we're largely done. But when you think about it,
Mhm.
even in the last, few weeks, the yen relative to the Canada or the US dollar, like it's up 10%. It's still cheaper. It's still cheap in a historical basis. But all of a
Yeah.
sudden, it's up 10%, right? That's a massive change.
There's a
And so that
decline
made
we
the
had in the
markets go a
markets.
little wild.
Yeah, I was just pulling up the S&P here, and just that decline we had in late July to early August. It's completely rebounded, and I think really the fact is that there was too much selling happening too quickly here, and probably a little bit of reactiveness from other investors saying, "Oh no, the markets are going down. We got to sell everything." Stuff we talked about last episode, but
Quick momentum, yeah, very much.
how quickly this kind of bounced
Oh,
back to
bounce back
near
too, yeah.
all-time highs, 5,600 today on the S&P. As market's not quite closed yet, but it just
It was
shows
all
you
just a
really
dream. Everything the last 3 weeks was just a dream.
that whole episode talking about volatility. It didn't matter. Well, I mean, it was volatility,
It
but
did matter in some ways,
things,
right?
yeah, yeah.
Had you deployed or had you done or been patient, and had you not sold or whatever, or maybe you had some cash and you invested it during that dip, right?
Mm-hmm.
It does matter on the small scale, but on the grand scale, even within the matter of 1 month, in less than 1 month's time, it was sort of a blip, right? But you can see how the dollars, and these are trillions of dollars that are being borrowed in Japan, right, at
Mm-hmm.
nominally no rate, to then all of a sudden paying some rate and taking that money and reinvesting it elsewhere, whether it's a treasury or a GIC or the Nvidia or whatever you want to invest in, right? That stuff had to get sold in order to pay back some of the borrowing that they did. And it's
Mm-hmm.
maybe not fully complete yet.
Interesting thing here. I'm looking at the, and sorry for anyone who's listening to our podcast and has not seen the beautiful charts I'm pulling up here on Y charts.
Go check out YouTube.
You might want to just turn off Spotify right now, switch to YouTube, watch for the charts. Maybe I'll try to get some of these in the show notes afterwards. But I'm looking at the S&P 500 versus an iShares MSCI Japan ETF in US dollars, and you see how much Japan went down. Now, the actual index in Japan went down quite a bit more. I think the Nikkei was down like 20 something percent from its high points, probably right around July here. But in US dollars, not quite as painful, down from high to low 9.3% here. And that is because of that increase in the value of the yen as all that money flowed back in. Looking back at that this chart here with the Canadian currency, so Canadian dollar to yen. The way to look at the yen, you have to remember it's kind of an inverse of normal currencies. When we look at a currency, if you see the US dollar being up when the US dollar goes from 1.3 Canadian to 1.35 Canadian, that's the US dollar getting stronger. With the yen, we're kind of looking at it in inverse. So we're looking at here right now 107 Canadian dollars to 1 yen versus before here it was 118 Canadian dollars. And that was weaker. The number's higher, but it was weaker versus at its low point here. This is when the yen was at its strongest at the beginning of August, $102 Canadian per yen. So again,
100 yen per 1 So
102 yen per
to qualify,
Canadian dollar.
yeah. So 100 yen is essentially like $1.
Yeah. So that type of move, I mean, it did happen in 2020 here, I guess, right with when COVID hit.
If you want to go to Japan, it's still not a bad opportunity. Your Canadian loonie is still stretching pretty strong relative to what it was historically.
Mm-hmm.
right? It's not as good as what it was maybe in the springtime, but it's still pretty darn good. There's a lot of different moving parts, a lot of different factors, and that's what I find as a hate to use the term student of the markets, but these are things that are just fascinating, and to realize that there are impacts to our decision making, your life, my life, that are because of decisions or catalysts on another side of the world, and just the sheer amount of money moving around internationally, right? Just staggering,
Mm-hmm. Mm-hmm.
right? So, but yeah, Japan right now, if you look at the MSCI World Index, right? Again, we talk about Canada being about 3% ish or so. I think Japan right now is about six. It's about double Canada.
6%.
I
What's
think,
crazy though is it used to be the majority of the MSCI world back in like the late 80s,
yeah.
early 90s.
And
Again,
if you were to
stuff
look at
changes all the time,
EFI,
right?
yeah, it does, right? Canada, the UK was bigger than the United States at one point too, right? When they were the world superpower. But I think in EFI, correct me if I'm wrong, EAFE, it's an acronym that are used to represent Europe, Australia, and the Far East. So, i.e., otherwise, mainly Japan. And I think Japan in the EFI indices is over 20% still. It's about 20, 23,
24, yeah,
25%.
just looking it up.
25, it's almost a quarter. So
Mm-hmm.
that impact that you talked about in the world is still certainly reflected in the EFI, which is otherwise like the rest of the developed world outside of North America, right? So it's still a major impact, a major factor in that sense too.
If we're talking actual investments that we might have in our portfolios, a lot of
Mm-hmm.
people have an international equity fund in their portfolio, and maybe recently didn't look so good in August. You're looking at your US part of your portfolio versus your international, and that international, and it just keeps disappointing you, eh?
There was a time, right, when
It was
it
the
was
opposite.
completely flip
Yeah.
flopped.
Yep. Yep.
China was the number in Asia and the emerging markets. You could do no wrong investing in. Why would you invest in North America?
And the
All the
US
issues
was
they're having.
nothing but wrong.
Yeah,
The
yeah, that's
US,
right.
if you look at the US in
Financial crisis
1968 to
issues. Yeah,
1982, was nothing but wrong. And
yeah.
then, yeah, you said the financial crisis, you first of all, in nominal terms, the US markets were underperforming from around 2000 to 2007. And then the US dollar was losing a lot of value versus both the euro and the Canadian dollar and probably the yen too. Why would you want to have owned US back then? But the thing is, that all changes at some point, and we can't guess when. Um,
What one sort of last sort of thought I would have about Japan or East Asia is that there are world leading companies. We talked about like Novo Nordisk in the past out of Denmark, right? I named a bunch of names out there, right? There are solid world leading, firms, companies, ideas, products that are happening out there, and
yeah.
IP.
So, did you
So
say you visited Japan before?
I've been a few times. Yeah,
A few times, eh?
it is a lovely place. We have some family friends who live out
Yep.
there as well, right? But again, if you're crossing the pond or you're comfortable crossing across the big pond, going to Korea, going to Japan, going to China, it's easy to do. I've probably been to more. I've traveled to Asia more often than I've been to Europe, right? So I've been to China 5 times in my life,
Mhm.
Korea almost as many, Japan 3 times, right? So um, it's I highly encourage you to, and everyone else, yeah,
It's a bucket list
check
thing
it
for
out.
me. All right.
All right.
We'll leave it at that, I guess.
Well, the real new year starting with Labor Day in school and all that, so whole new things to talk about. Looking forward to it.
Yeah.